As Hurricane Irma continues to leave destruction in its wake across Florida, Goldman Sachs Group Inc. says Harvey, the storm that struck Texas more than 2 weeks ago, remains a bigger concern for the oil market. While Irma, which made landfall in the Keys late Sunday as a Category 4 storm before weakening, will hurt oil demand, Harvey's damage is far greater, the bank's analysts including Damien Kuval said in. That's because Texas is home to twice the oil consumption per capita of Florida. Together, the storms will impact about 600,000 barrels per day in demand, according to the bank. We believe that Irma will have a negative impact on oil demand, but not on oil production or processing, the analyst said. Harvey's negative impact on demand will remain larger, however, given the large concentration of energy-intensive petrochemical activity in its path. Crude prices in New York slumped as gasoline prices soared after Hurricane Harvey halted almost a quarter of the nation's refining capacity. While some oil processing has recovered, 6% of U.S. capacity still remains shut. The post-storm recovery will likely bring oil demand to a higher level, gradually offsetting the negative impact. Irma's hidden demand will partly offset the Gulf Coast's refinery runs, which is taking longer than expected to recover, according to the bank. Still, on a net basis, U.S. crude inventory builds could grow to record levels with smaller production draws in the coming week. The recovery is well underway, but the restarts are taking more time and, for some refiners, exposed more significant damage. Irma, which initially hit the Keys in Florida with winds hitting 130 miles per hour (209 km), has knocked out power to at least 4.7 million people, paralyzed tanker traffic, and shut about 6,000 gasoline stations. It has now weakened to a Category 1 storm, and was about 25 mi northeast of Tampa, the National Hurricane Center said. Harvey slashed refining capacity across Texas, forcing shutdowns of key refineries from Corpus Christi and Houston to Port Arthur, including the largest U.S. fuel-making plant. Goldman Sachs's estimate for refinery outages remains at 2.24 million barrels per day following Harvey. The lack of an outlet for U.S. crude production may additionally create a risk of onshore production disruptions as outages remain elevated following Harvey. West Texas Intermediate for October delivery was at $47.66/barrel on the New York Mercantile Exchange, up 18 cents, at 4:30 p.m. in Singapore. Prices slid $1.61 to close at $47.48 on Friday, the most since July the 5th. Gasoline futures, which surged 25% last month, lost 0.5%. To get faster updates and the latest news from the oil and gas industry, please subscribe to the YouTube New Video channel and connect with us on Facebook, Twitter or LinkedIn.